All right, welcome back. In about half an hour or so, we'll know whether the interest rates have been tweaked, the typical interest rates that the RBI does, which is the repo rate, reverse repo rate, the bank rate. We'll know all that, but I guess everyone also wants to know how many currency notes is the RBI going to print? Are they going to say that or not? I'm joined by an esteemed panel right now. I'm going to introduce my Delhi guest first. Former SBI Chairman Pradeep Chaudhary is here with me, and also Munish Dayal, his partner at Bearing Private Equity. He's here with us. Madan Sabnavis in Mumbai studio, along with Anindya Banerjee. He's there as well. I'm going to first go to Pradeep Chaudhary, who's in a bit of a combative mood today in his red tie. Pradeep Chaudhary, what do you expect first? Actually, let me just take what you expect today first. 30 seconds from each of you first.
No, it is a meaningless exercise because there is a repo rate and there is a reverse repo rate. Repo is when the banks need cash, need money, they borrow from RBI, and reverse repo is when they have surplus cash, they will put it with RBI. But RBI says, don't count on me for the reverse repo. So reverse repo has disappeared. So what kind of market we are running? In fact, in all these crisis situations, RBI is supposed to be the stabilizing factor, and it has become the disruptive factor. It has just withdrawn itself. It reminds me, that if there is a brawl on the football ground, the referee says, sorry, I can't help you folks, I am running for my life. So RBI has decided to walk away from the field and leave it to chaos. And the kind of rules they have framed, I only hope they are withdrawn immediately, that any extra deposits or demand and time liabilities would be taken away by CRR. If this rule is implemented, I think each single bank would default on their CRR. And default in CRR can even lead to cancellation of the banking license. So I don't know what RBI is. And secondly, as you said, that RBI thinks its bi-monthly function is only to fix the repo rate, and reverse repo rate doesn't exist anymore. So repo rate, and say that I have nothing to do, currency and all that is none of my business. So you fend for yourself.
All right, Munish Dayal, I was asking you just before the show began that do you really care about any interest rate change? And you said, yes, you do, it is important. So your 30 seconds.
So, first of all, I think it's a momentous monetary policy date. And so there are a couple of things. One is the expectation that the interest rates would come down on the repo side. I think even on the reverse repo side, they would decline them. Like Mr. Chaudhary said, so my expectation is at least a 50 basis points, right? Anything below that would disappoint me because there would be enough opportunity with a decline in demand, with decline in inflation, that there is enough leeway for the RBI to reduce by 50 basis points. And also on the reverse side, the reverse repo rate. I think they would, like the governor had said, remove this CRR which was put on incremental deposits, which was because of lack of bonds, and now that they have the MSS scheme, they're quickly mopping up the excess liquidity which is in the market. So these are my expectations. I would love to hear what is the ground reality from RBI's perspective on the growth rates. Where do they see GDP in the second half, and how do they see it in the forthcoming quarters? How quickly do they think that the monetization would take place? How quickly are they printing the notes? When will the banks get adequate cash, etc.? I think these are very important.
I think these are the things that everyone's going to ask more than the repo and reverse repo. Madan Sabnavis, is it a very tough day to be Urjit Patel today?
Yeah, in fact, what we would be expecting is 25 basis cut in the repo rate. And this is more to assuage the banks and keep the feel-good factor up. Because actually we see banks have already started lowering the interest rates irrespective of what happens to repo. So there may not actually be a compelling reason at a time when borrowing is actually at a very low level. But still, I think just to placate the markets, there could be a reduction in the repo rate by around 25 basis points this time. Second, I think in terms of the incremental CRR, I think that's something which will definitely be withdrawn, or at least we'll have a calendar to say that it's going to be withdrawn in phases of, say, a fortnightly or weekly, whichever way it is, and coincide that with the MSS bonds so that you're able to absorb the same amount of surplus deposits which are there with the banks. Third, as was mentioned, I think it's very important for us to hear what the RBI has got to say about GDP growth, because I think all the economists have created a mess here with having different kinds of forecasts. We at CARE have reduced it from 7.8 to 7. There are others who have been bolder and gone towards 2.5 percentage points. So it'll be nice to hear the RBI actually come up with this view. It's always been very moderate in terms of their GDP expectations. And fourth, I think some kind of a review also on the inflation targets. Do they think it's going to come down? Because it's like prices are moving downwards because of the demonetization right now. But given the problems that could come in the Rabi season, there could be an upward movement towards March. So I think these are the four things which we would be looking out for.
All right. Hemendra Hazari is here with us as well. Hemendra, how fair is it to sit here, people like us who actually are on a business channel, and ask for a rate cut when people across the country have been forced to deposit their money and they're going to earn less interest on it?
See, not only has the common man been forced to put in his money, today there are many bank branches where you go to, as I did this morning, and the bank has no money to give at all. Forget 24,000, forget 5,000. They don't even have 1,000 rupees to give you. Now, all this, who is to blame? Who is to be held accountable for? You see, every day the credibility of the Reserve Bank of India is hitting a new low. And the credibility, it's under this particular governor that this has happened. In fact, my first question would be, has the governor and the deputy governor in charge of currency management, Mr. R. Gandhi, considered tendering their resignation? Because they have caused this whole, squabble. There was no need. It is on the recommendation of the RBI. And today it has caused the misery for millions of Indians. And no one is to be held accountable.
Okay, Hemendra, I'm going to come back to you. Anindya Banerjee is there. Anindya, what are your expectations?
We are expecting a cut in the repo rate by 25 bips for the simple reason that this whole process is going to be growth negative. The big question mark is how long, short term, say medium term or long term. It's too premature because we don't know how long the intended and the unintended consequences will run. 25 bips cut, but the whole focus on this policy will be beyond the repo. It's going to be on how the currency management will move forward, how long they will keep the CRR hike on, and all those things.
All right, let me come back to Pradeep Chaudhary. Mr. Chaudhary, you've been the chairman of the largest bank in the country. What is it in it for banks right now? I mean, there is money coming into banks, there are deposits coming in, a lot of it is drying in just cash because they're unable to send it to the RBI's vault. The extra money that's been coming in has to be put into the CRR and therefore you can't earn anything on it. On the other hand, when I went and deposited my money, I'm going to earn some interest on it. What is the government or the RBI or anyone doing for banks, the kind of costs that have gone up for them?
Actually, the facts are that the cash is being offloaded. The banks,
okay.
yeah. In fact, this Sunday, the local branches of SBI were told, push all your cash into RBI, which has happened. But I think I can give an analogy with the plight of banks with, Lord Shiva in Hindu mythology, that he swallows the poison and he can't take it out, so his neck, is blue. Because that's why many people call him Nilkant, the blue throat. So the banks will have to swallow the poison and keep it themselves. They can't spit it out, they can't swallow it. And they can't absorb it. So it's a huge predicament, and it is absolutely shocking that RBI should be like the captain of the ship. It should be stabilizing, so it should be, as it is said, the last man standing. And now it has become the first man running. He says, don't ask me, I have to save my skin. So this is something where we have never seen this kind of behavior from any central bank or any monetary authority anywhere in the world.
As the moderator here, I should just ask anyone who wants to say something in the defense of Urjit Patel to raise their hand. But let me try my luck with Munish Dayal. Is there anything Urjit Patel could have done? Because it's in some senses, I know that the government says that the RBI recommended it, but everyone feels it's the Prime Minister's decision, it's the PMO's decision to demonetize. It was announced on a particular day and the RBI was caught on the wrong foot because it didn't have the money. Now, you could say that he should have resigned, but how does that solve the problem?
So I don't think it does, and let's be sure that this was a political decision. This was not a monetary decision to demonetize. So it was a political decision which was taken place and fairly secretively. And the preparation time for the RBI, to be fair to them, was limited. Could they have got 6 months to do it, 3 months to do it? So it was limited. Within that, to the best of their ability, they're trying to print notes, get it out to the banks. It's a logistical nightmare. Let's not fool each other. The execution has been disastrous. And we can keep debating it. It's not solving a problem. Now, the fact of the matter is that there is enough cash lying around in the system. They don't know how much more will come, how much will go out of it. Right? Now, to the banks, they have...
I was reading the Indian Express this morning where they have quoted Mr. Adya saying that, Hasmukh Adya saying that they now expect all the money to come in because they've got that income disclosure scheme. So there's actually no reason for me to burn my cash because I can disclose that income now.
Absolutely. So they've already collected 11 lakh crores, right? So, and they expect...
And the estimate in some cases, I saw a Bloomberg report which suggested that that's more than 12.5 lakh crore.
Yeah,
so that's a huge amount.
I think the expectation to be realistic was around that level. So even if they don't get 1 or 2 lakh crores, that was what they had thought. But the real problem is how do they monetize it back? How do they get it out into the system? Right? At the same time, I think there are a lot of moving parts. One is that you have structurally reduce consumption and demand for the foreseeable couple of quarters, which is going to impact GDP in a significant manner. Right? So that writing is on the wall. Nobody is able to pinpoint, like one of the panelists said, whether it's going to come down to 6% or 5% or 4%.
Right.
Now that's a huge issue which they have to deal with. At the same time, after a long time with the RBI, suddenly the reverse repo is more important than the repo because the banks are going to deposit money with the RBI. So it's not the lending rate, it's your deposit rate. Now that today is at 5.75% and that's going to come down. I think they were little late in getting the MSS approved and that's why they had to put the CRR as an interim. Had they got MSS approval earlier, they wouldn't have had this issue. To be fair, the banks have lost about 1,000 crore per fortnight, right, as a system as a whole. They will make up a fair bit of it through reduction in rates and they'll make a killing on their bonds, right? So it is a mixed bag for the banks. The banks who were CASA deficit have never seen these kinds of CASA deposits, right? So to some extent, it is solving problems. Some of the NPA loans have been repaid, but the banks will have to pull themselves out of this.
But Madan Sabnawes, is there anyone waiting to take loans right now? I did an impromptu poll in our newsroom asking people whether they want to take a car or a housing loan and everyone said no till we know whether we're going to have our jobs next in 2017. We're not taking any loans. So
I don't think there's much demand for credit today, and that's happening in all the segments. In fact, one particular segment, that's the mortgage segment, which has been fairly robust during the course of the year. I think that's going to also take a back seat because with the problems which are there in the real estate sector, I think people are going to keep deferring their purchases because we all expect that the prices of your dwelling is going to come down. So I think even that particular segment is going to take a back seat. And given the fact that our consumption has generally fallen quite significantly in the last month or so, now, until such time there's a recovery, I think the entire story which we had built around saying that consumption is going to go up, your capacity utilization is going to increase, and the industry is going to start investing more. I think this entire process is going to get deferred definitely by 1 quarter, if not 2. So to my mind, lowering interest rates is only a case of saying that I'm making you feel good, but there's not going to be enough demand for such credit. So therefore, I think the government securities market, the MSS bonds or the reverse repo rate, I think all of them become important because we're looking at banks getting their income from alternative sources other than the primary function, which is lending.
Effectively, Hemendra Hazari, then, the RBI could effectively bring down the cost of borrowing for the government, right? Because now I would say that most people I talk to now say that monetary policy is over. There's no need to look at it. Now let's look at fiscal incentive because that's the only thing out. So the cost of borrowing comes down, Hemendra Hazari. That's a significant achievement, right?
No, that would be. But let us assume RBI comes up with an assessment saying that GDP will come down by, say, 0.25 or by 0.5%. Right. Now, the issue is, what is the credibility of that assessment? Because they could not understand, they could not comprehend the impact of demonetization on the currency situation in India. How are they going to comprehend what will be the impact on GDP? So today, the credibility of our central bank is at a way low. the credibility of the governor, the entire institution, that is, very sad and pathetic state to see that they have I'm sad to say, no credibility now.
Okay, Anindya Banerjee, have you crunched any numbers as to how long it's going to take to remonetize the economy?
The estimates are running anywhere between 3 to 5 months. So we are already through by 1 month or so. So at least another couple of months would be needed.
So how much money do you need in the system in terms of, if you have, let's say 15 to lakh crores have gone out, right? How much do you need in the system for business to be as usual, to run as usual?
That number is still not clear, but it will be at least half of that money would be needed to run the economy, because anyways the informal sector is going to shrink because of this effort and the subsequent measures which the government is going to bring in, because they have clearly stated that they will be looking to formalize the economy. So activity is going to come down, but nevertheless you need at least a substantial chunk of that, say 15.5 lakh crore to run the economy.
So I was told, Pradeep Chaudhary, you've been...
Two short points.
Yeah.
One is that, how will demand come? The banks were now, banking on retail loan growth. But you look at the retail branches, even a person wanting a loan just can't get into the branch. Right. And my manager tells me that nothing except giving cash and exchanging cash I can do. And second point, I want to caution people that let them not be naive, thinking that this amount is coming as CASA. Not at all. Because, I went and put in 1 lakh rupees of my personal money in cash. Immediately as I came home, through the net banking, I put it in fixed deposit. Right. Why should I let it languish in CASA?
Yeah, exactly. That's exactly what I was going to ask you. In any case, why would I want CASA if there's no one borrowing? Madan Sabnabis, we were already at a low kind of operating leverage. Industry was already at a relatively low usage of the things that they were producing. Right? Just to make it simple for our viewers, if a company was producing 1,000 cars, they were actually making, all right, we have rates unchanged. RBI has kept repo rate unchanged, and it has kept everything unchanged. All right, so that's the breaking news we're getting at the moment. I'm going to try and get this, the RBI release as soon as we can get it on for you, but that's the big breaking. We're trying to see what's happening. All right, repo rate unchanged at 6.25. Yeah, we'll just have to wait and see whether because they said that the review on the 9th, they might as well have done it today. Repo rate unchanged at 6.25%. As the numbers keep coming in, we'll keep telling you about it. I think Mr. Chaudhary, I think they said that they're going to review it on the 9th, right? But they might as well have reverse repo rate unchanged at 5.75.
But does it exist?
But does it exist?
Or is it a theoretical reverse repo rate?
That's the crucial thing to look at, because if you're not allowing anyone to park any money, and it's not from demonetization date, it's actually been backdated, right?
And in the one point, RBI can always persuade the banks to issue T-bills. Because the treasury bills, say 90 days or 180 days, are at the short end. So even in a normal, interest rate curve, they are the lowest cost. Okay. And all the countries of Europe and this thing, they have largely substituted their long-term borrowings with short-term borrowing. So what it has done, regardless of what happens to the interest rate curve, they are borrowing at the short end. So therefore, there is a case for increasing the T-bill supply, which will soak in the reverse repo amount and would also lower the borrowing cost for the government. And as we know, the government has already run up 75% of the total budgeted deficit for the year in the first maybe 7 or 8 months. So there is enough demand for money from the government looking to the deficit they are running.
All right, so as of now, let's just quickly show you what has happened to the bank stocks. They've all completely collapsed. As expected, SBI is down about 2% I can see there, 2%, Bank of Baroda 2.5% down. I guess the markets were expecting a bit too much. But the important thing will be the commentary, which we are trying to get to you as soon as it's out there on the website. What we're getting right now is that monetary policy stance remains accommodative, prudent to wait and watch I'm assuming this should be prudent, not prudent to wait and watch as developments happen. That's the flash which is coming for us. Looking through transitory but unclear note ban impact. GVA forecast to 7.1%. So they've cut it by about 0.5% there, 50 basis point cut. Outlook for FY17 GVA, uncertain post-note ban. So I guess that answers Hemendra Hazari's point, where he was waiting for the RBI to make a comment and then say that it lacks credibility. But that answers what you wanted, because they themselves said that we can't take a call on this. Note ban may bring down CPI by 10 to 15 basis points in October-December. Monetary Policy Committee felt impact of currency withdrawal still unfolding. So they don't really know what has happened. Everything remains unchanged. That's what we are hearing right now from the RBI policy. We're going to try and get you the details as they come in. All right, let me just try and get it from my camera person who has the RBI policy right here. He'll hand it over to us so that we can look at it, and then I'm not being able to download it now. All right, okay, this is what we have here, that global growth picked up modestly in the second half of 2016. I guess no one really wants to know that at the moment. But let me get your first views on it. Let me start with Munish Dayal, who has been quiet for a while. 50 basis point cut, anything less than that was going to be disappointing for you. But the fact that the RBI officially says we don't know what is going to happen, is that a good thing?
Well, I think it's a very bad thing. Okay. If the central bank says they don't know what's happening, I think that's a bit shocking. And the fact of the matter is that they're flushed with liquidity, right? They have more money than they can deploy. There's no credit demand. The country seems to be running into a stagflation kind of environment. Why would you hold on to rates? 50 was a base minimum expectation. And on top of that, they're saying they're accommodative. But even in a scenario like this, if the RBI is not willing to reduce rates, I think it's being extremely hawkish, number one. Number two, it's disappointing that the Reserve Bank of India does not know what's going on and will come out saying we need to understand this better. And I don't know how the banks would manage their balance sheets and their businesses if the central bank's guidance is in this manner.
I'm just trying to find whether they've done anything on the CRR right now. They're saying that from the fortnight of November, and then 100% was applied on the increase. It's on page 3, Mr. Chaudhary, in case you want to see it.
No, please, see it.
I'll look at it from the site. You can look at it on the increment. CRR of 100% was applied on the increase in as a temporary measure. Liquidity absorption fell back. As expected, money market conditions tightened thereafter, and the lifted on November 30. All other rates in the system firmed up in sympathy in term premia. Liquidity management was bolstered. I don't see. There have been 2 issuances of cash management built under MSS for 1.4 trillion by December 6, 2016. So they've not really changed that as of now, it appears. We just have to look through that again.
Sensex has nosedived. Sensex was 200 points up.
Right. So it's down about. So we've seen about a 230 point approximate movement on the Sensex right now. 113 points down at the moment. And the Nifty now at 81.18, 25 points down. Let me go back to Hemendra Hazari. Hemendra, you just heard Munish Dayal saying that it's very, very disappointing that there is no statement from the RBI. And I don't even see anything major coming in from what they feel is the impact of monetary on demonetization and what they're going to do to remonetize. We just have to go through this a little bit better. What is your initial reaction?
See, I am not surprised at all with the uncertain outlook, because if you've been following every day since demonetization, it appears very apparent to everybody that the RBI is clueless of what's going on. So it becomes very clear to me that they've launched this great scheme under political pressure, having no clue, no planning, no impact of what such a measure would do. And therefore, how can you expect the economics department to come up with an impact on GDP when they don't have an impact? If you withdraw cash from the economy, what will happen basically to all the cash transactions? If they cannot understand that, how do you think they can understand what the impact will be on a more complex measure as GDP?
I think there's one statement here which says that the Reserve Bank undertook variable rate repo auctions of 3.3 trillion on November 28th. So, is this, Mr. Chaudhary, older money, or are they saying that we did allow that much to take place?
No, it would be older money because this repo and reverse repo is given on the book balances.
Okay.
Now, even if I go and deposit old cash, that swells the bank's deposit level. So that will, and it will
No,
come
I was saying that once they said that the incremental money which has come in has to go towards CRR 100%.
That's right.
After that, they've said that we held 2 repo windows, repo rate auctions.
So I think it is 5 blind men feeling an elephant and trying to figure out what it is. So nobody has a clue.
6
and I
actually in
think
this
it would
case.
be extremely adventurous for anybody else, less informed to, hazard a guess.
Madan Sabnawes, half a percentage point cut in the GVA. Now, this despite the fact that they're saying we really don't really know what is happening. And as Hemendra feels that this is a very political decision taken, and I think that Mr. Chaudhary and Dayal also more or less believe that. Yet the RBI has cut it by half a percentage point. Does that mean that it is going to be worse, or do you think that it's being cautious?
No, I think this will be the minimum fall in the GVA for the coming year. So I think it's a very conservative outlook, saying that there will be at least a 0.5% fall in the GDP growth rate. I would tend to think it will be much higher than that. But I think it would be a bit too harsh to say that the RBI has kept things in the limbo right now, because I think nobody is really clear about how exactly this demonetization effect on the economy is going to play out. Because even today we get various stories in the agricultural sector, in the SME space, in the service sector space. Well, there are some people saying that things are actually started moving digital and things are going online and people are trading in a normal way. We also see the other horror stories of farmers forced to sell their produce at a very low price, which is going to affect their income and the consumption part.
So I think we've got a story, as you're mentioning, today we've got a story that an entire bunch of cauliflower which was brought to the Azadpur Mandi this morning was sold for 100 rupees. That's what the farmer couldn't sell it for anything more. So that's we just got this story today. Yeah.
So I think it's a fair kind of an assessment which the RBI has made. Rather than say that we expect things to clear up by December 31st, I think even the RBI is not too sure about which way we're going to go. So I think what they have given is a good number of 0.5%. So we can work on the basis that if the RBI says 0.5, it could be worse, but definitely it won't get better than this.
Won't get better than this. Anindya Banerjee, your first reaction, you were also expecting a 25 basis point cut. RBI seems to believe that this is not the right time, right? Because there's no point in cutting rates. Right.
Yeah, actually, I think RBI has been quite candid about it, that it's too early to estimate what will be the impact on growth. We all know it's going to be a -1. There's going to be a negative shock, but it's very difficult to quantify whether it's 100 basis points or 300 basis points. So they have been candid on that front, and they have been also consistent, because if you're going to cut rates by 25 or 50, you have to justify it through your the outlook. So you have to substantially downgrade your outlook on the inflation and GDP. In fact, on the inflation front, what I picked up was that they have flagged a few upside risk, which would seem a little premature now, because with the downward pressure on the service sector inflation will fall. So that will have a downward impact on the overall inflation as well. But on a whole, we would believe that keeping the outlook, they have taken a more balanced view.
Right. I have with me my esteemed panel, and let me go to Prateep Chaudhary. That's the question. On the one hand, in the statement, it's saying, and they're repeatedly saying it, we saw the governor and deputy governor saying that we knew what the impact is going to be. It was well thought out. We knew what is going to happen. On the other hand, they've said that we don't know what is going to happen.
Yeah, I'm reminded of, one US president saying that I needed 100 economists, because every economist tells me on one hand this is so, on the other hand it is just the opposite. So till such time we have 100 economists, I think this situation. But I am baffled, why this CRR penalty from September? Now, the demonetization decision happened on 8th of November, and if, as Mr. Mistry and everybody says, people rushed in and put in their cash with the bank. So the windfall, or whatever you call, the flow into the banks has happened from November onwards. Why penalize somebody for the deposit growth in earlier than that.
Because clearly RBI doesn't want to
because,
pay.
it is being said that the decision was kept in secrecy, and let us concede that.
Yeah.
So if it was kept in secrecy, then why should you penalize banks for this? And now I think, if you raise the CRR to 100%, banks, in order to remain profitable, will have to take the lending rate sky high. Otherwise, they can't compensate themselves. And it is very tragic that there is a reverse repo and repo syndrome, and RBI says, I have abandoned the reverse repo. In financial world, what matters the most is your commitment to stick to something you have laid out. Now, for example, in two of the major acquisitions of Tata's, SBI had committed $1 billion each for Tata Motors and Tata Steel out of the total 10 billion acquisition. And then the 2008 market disruption happened.
Yeah.
We went to Tata's and said, I don't know what happens to others, but we stand by every word of commitment of our $1 billion. Come rain or come sunshine, we will be standing with this. And that, Mr. Ratan Tata said, for the first time I realized how important it is that your bank stands by the word and in the hard days. Now, this is what, in fact, RBI should be exemplifying. It should be excelling. And on the contrary, they are saying there is trouble, so don't count on me, I am walking out. Now, this kind of thing is possibly least expected of the central bank, which is to have a calming effect. And what is this security? Security, RBI and government are the same. So even if you don't give security, MSS, you just give a word that, yes, I stand by, you put money with me, I'll return. Who will disbelieve that?
Right.
Nobody would disbelieve. So this, I think, that we don't have securities is too much of an afterthought, and it doesn't wash. Too much contrived. So I think the policy is totally confusing. It doesn't have a clue, and it doesn't even try to attempt to bring some stability and calming to the markets.
Manish Dayal.
So I think this is a new RBI we are dealing with. I think this RBI is ambiguous, it's non-committal, it's extremely guarded. You're not getting answers which all banks and all common people would like to hear. They had laid down glide paths, they had laid down inflation targets saying less than 5% by March 17, growth if it's going up, and then the real interest rates, which they had defined to be at 1.25%. Presently, your real interest rates are at 2%, right? Your inflation is as same or coming down. Your growth is predicted to come down. 50 basis points is extremely conservative. It could be 100 basis points to 150 basis points, right? So all the parameters based on which RBI itself had said we would relook at rates and get them down have been met. And now suddenly they changed the game, right? And given the fact that there is so much liquidity with the banking system, I don't know how they can stick with these rates, right? It is baffling, as I may say, right? And I think somewhere they have just underestimated or not acknowledged the fact that a large part of the supply chain and distribution chain is completely broken. The impact that would have on the NPAs of banks, because a lot of the traders, the MSMEs, the SMEs are not able to function, and they don't have the working capital or the ability to sustain what they're doing.
Right.
So all of these factors need to be addressed. How can the RBI just keep quiet about it and then say it's life as normal? We think half a percent here or there, inflation is going to continue the way it is. That's not the real world.
Madan Sabnavis, does the focus now shift to the fiscal policy entirely?
Yeah, it looks like it, because I think the RBI has made it very clear that whatever it would like to tell us, it's told us today. And now it's going to be up to the government to do whatever has to be required. Now, if you don't mind, I just, to what Mr. Chaudhary was saying, just one kind of conjecture. So it's not that I'm providing this as an explanation, but just a conjecture as to why September 16th was probably chosen as the cutoff time for reckoning those deposits which would come under CRR. See, we had a situation where bank deposits had increased, and we didn't have enough government securities to be used in the reverse repo operations of the Reserve Bank of India. So it was already 5.5 lakh crores. They had around 7.5 lakh crores. So I think in order to counter it, they worked backwards to say that in case we were to impound the CRR, impound the deposits through the CRR, what would be the right point of time? Now, actually, if one goes back, you'll realize that end of September was a time when there was an upsurge in the amount of deposits which came in. Right. So probably to work backwards and felt that, look, if I used September 16th and I used November 11th, which was a date just after demonetization, there would be the maximum benefit which could be extracted. So I have a feeling that's the reason why that particular date was chosen. There was no other logical reason
RBI?
Why September 16th should be by the RBI.
Benefit for the RBI. All right, Hemendra Hazari, what we are clearly, as Madan Sabnawis said, that we've heard whatever the RBI had to say. I'm sure you will say we've heard what the RBI did not have to say. Basically, it virtually didn't say anything. But is the focus now entirely on the fiscal deficit? One question, I remember we had this discussion earlier. It is very clear that the RBI is not going to be handing over any special dividends, right?
I think now the onus of responsibility to revive demand in the Indian economy, and demand anyway even before demonetization was flagging, was to increase government expenditure. Now we have to, everything will depend on that, and I think the economy and global capital also has to accept that if this economy has to be stimulated from the dumps the RBI has caused it to go to, now will require a significant increase in the fiscal deficit, and without that, things are going to remain permanent and not transient. I would just like to point out one thing. If RBI says that this was a very well-planned, well-thought-of move, and we've all seen the impact, what can happen to the Indian economy if we truly have a black swan event, which is becoming increasingly common in global economies, that if there's an external crisis tomorrow and RBI says, we planned this move, it was well-planned for a totally unexpected crisis, how will this financial system react? It's going to be a disaster. Because this is the way they plan and this is the result. What will happen when there's truly a crisis which hits our economy?
Anindya Banerjee, I was just doing a bit of a back of the envelope calculation, and it looks like that the RBI has remonetized at about a rate of about 14,500 crores per day. But that's because a lot of it that they pushed out is high value denomination, 2,000 rupee ones. As soon as they start 500 and 100, that rate is going to go down. Does that change your calculations a bit?
No, it's actually a fact that it's not just the number of notes that is pushed in, it's the denomination which matters, because a 2000 note is almost like it's like a freeze in the system, because it cannot move so conveniently like 100 or a 500, and that what is the problem which the common man is facing. But that is the unintended consequence of the whole secrecy, because they didn't have the option of printing a new 500 or 100. So they had to. So that's a cost which the system is paying. But in fact, I would like to also draw your attention to the point about. I think there was a question on whether RBI was mindful about what the Fed will do and etc. I think that played a role, because cutting interest rates too sharply now, apart from the whole issue of trying to justify it through your outlook, is that it will bring down the interest rate differential between America and India, and that can have a bad impact on the rupee. Already we have seen FIs sell close to $5 billion since the November 8th. So that selling can accelerate. So that may have played a part.
In fact, I remember...
Yeah. That is our priority. RBI monetary policy priority is to save the FIs.
But I have to say that, Anindya Banerjee, I spoke to you, I remember last month, and you did mention that perhaps this change in the drop in arbitrage could act as
in fact,
problem.
It's the other way around, that the interest rate differentials are, I think, depriving Indian economy of the competitive edge. Because interest rates and the supply of capital at a given price is a very important factor in your deciding on your competitive position. So given the high interest rates on rupees, I think is very negative on our competitive positioning in the global economy. In fact, in the discussions with our staff unions and officers, the single demand that comes, that give us dollar-denominated loans for our staff house. So everybody, such is the differential. What we have reduced our economy to, that anybody wishing to borrow, and that in fact is depressing the domestic demand. I tell you how. For example, there is an item called soda ash, which is an ingredient for the glass industry.
Right.
Now, given a choice, if I am a glass producer, I would rather source soda ash from overseas, because then I get credit at 0.5% or 1% for 6 months. But if I source it from a domestic source, then I will have to pay much higher interest, or this person will pay much higher interest, and that will be built in. So this kind of high differentials in the interest rate is acting as a dampener on domestic output. I think this factor also has to be recognized, rather than all the time thinking that what is beneficial to FIIs and what is, coming in. And another point I want to make, that, so much is being made about unclean money and hidden money and money without identification. What about participatory notes?
Exactly. I was
Why
just going to
don't
ask you that.
why don't you press for more disclosure? People can put in billions of dollars without disclosing their identity. Okay, you say that I want it because it is for the economy. Then don't go about saying from the rooftops that I want clean money. I want every investor to identify himself and the money they are bringing.
I mean, there was an attempt, if you remember, sometime in the mid-2000s, and the markets crashed as soon as I think at that time.
So be mindful of that.
That's what happened. But we also heard things about digitization, that this is going to lead to digitization. And I'll give you an example. I went outside our office and I caught hold of people who to me looked like illiterate. They were probably not. But I punched in 58.25 on my calculator and I surveyed 13 people. 7 read it, 6 could not. So I think this is outside our office in South Delhi, right here. So digitization is easier said than done. Would you agree, Madan Sabnawis?
No, absolutely. I think when we talk of digitization and saying that I can pay my vegetable vendor through Paytm or anything, we are looking at a very, very small circumference. But a country is much larger, and we have seen that there are problems because most of the villages don't even have electricity. So it's one thing to say that you use a debit card or use a mobile phone. Very often the server is down, the shopkeeper is not able to connect you to the server, and your transaction just doesn't go through. So just as what you were talking of, asking 13 people and getting this kind of response, personally, for the last 10 days, I've been going along Andheri market out here, which is a fairly upmarket area, and I'm trying to buy certain medicines and pay cards, and the server always seems to be down, so I've not been able to make my purchase. So I think digitization looks very nice when we're sitting in air-conditioned rooms here and saying that everybody should digitize, everybody should start using cards, but at the ground level, it doesn't work that way. And very often we get carried away by the immediate people around us who say that they're using it, and we say, look, even the poorest person out here is able to make transactions this way. But I think the reality is quite different.
Mr. Dayal, you have a response to that.
Yeah, so I think we can all sit here and go through everything everyone's doing as being incorrect or having faults. The fact of the matter is that the banks on their own have tried to digitize forever, and they have pathetic outcomes. The fact of the matter is that this is a step in the right direction. Does everyone know how to read and write? Maybe not, but every bugger is sitting and using WhatsApp. Right? So the mobile phone, the WhatsApp penetration is much higher than people doing banking. There are more phones than bank accounts. So this is a huge step in the right direction. I think we should applaud and acknowledge it. And I don't think we should go and, mollycoddle about it, whether it's good or bad. I think we should all facilitate it in whichever manner.
I partly agree with you, but I'm not going to point my disagreement as a moderator here. Hemendra Hazari, I had an experience. My newspaper guy came and gave me this bill, and I said, why don't you do Paytm? He said, of course I have Paytm. So I paid it to him, and then I said, I hope you're keeping the bills. He said, why? I said, because you now till now I was paying you cash. From now you're going to be recorded. Every transaction is recorded. So he said, oh my God. He said, can you take this back? I said, no, I can't take it back. So he clearly was not aware what digitization also implies, because his margin is very low. He doesn't want to pay the tax. So he obviously will come into the tax net.
But Anindya, on that, I would say that, for example, service tax. Now it has come to be accepted, and even professionals, of course, you leave out some very small segment, have accepted that. And I would agree that digitization is happening on a large scale, and it is desirable. So you see, illiterate people also are using mobile phones. Right. So I don't think there is anything wrong about it. We should go for it. But which country has abolished cash? Right. US also, uses cash.
40% of consumer transactions, according to the Fed, is cash.
Yes. Right. But I think bigger challenge will come when you go for GST.
One final question, and this is to Hemendra Hazari. The point that I was coming to is about oversight on tax. Now, the estimate I was reading somewhere is that there are 4,000 assessment officers and 1,000 of investigating officers in the IT department, 72,000 posts, 22,000 not filled. If let's say 4 crore bank accounts, let's say 10% of the total bank accounts were to be assessed, on an average each person will be assessing 10,000 a year, right? Is that a possibility at all?
See, any rule you have the Pareto principle where 20% give you 80% of your business. So if you had used that, if you could target the 80% of black money with 20% of the people, actually a whole investigative arm should have gone into that kind of principle. And similarly, you could have targeted the participatory note holders, some of the real estate holders, or some of these large corporates. But what we found was that you just went in for this carpet bombing exercise. So this is the kind of way this government wishes to go about things. They don't want to concentrate their scarce resources. So now we have to see whether they can actually do it. I think it's very doubtful that they'll do it. But so far we've seen that they prefer the carpet bombing to rather than surgical strikes.
All right, gentlemen, thank you so much. We've run out of time. Thanks a lot for joining us on this day when nothing much really happened, but still it was exciting. Thanks a lot.